Welcome to Enrich Your Life, where financial wisdom meets everyday life. Hosted by Richard Leimgruber, a financial advisor with over 25 years of experience, this podcast brings you powerful insights to make smart choices and build your financial future. Get ready to dive into practical strategies to grow, protect, and shape your financial story, one podcast at a time.
Hello, and welcome to Enrich Your Life podcast. I'm your host, Rich Leimgruber, and today we're talking about a very important topic that I tend to make sure I'm speaking about when I meet with new clients, and that is life insurance and why it's important to at least review it and make sure you have enough. We know it can be complicated and confusing. Life insurance comes in many different forms, and not all policies are created equal. So what is life insurance, and what is the best life insurance for you? I get it. The cost, the structure, the duration of the additional benefits, it can all be overwhelming. What life insurance is best for you? How much life insurance do you need, and how long should you keep it? Well, we're going to break it down for you today. And my guest is Jim Feldesman, who has 3 decades of financial expertise in both education and business, works alongside his clients to secure their financial future. And as a former attorney, his focus is on using life insurance to craft tailored strategies and help manage longevity risks wisely to help protect their assets. So with no further ado, Jim Feldesman, thank you very much for joining us today.
Thank you for having me.
It's obviously a topic of conversation that most people have once or twice in their life, right? And if they're lucky enough to speak to somebody like you, hopefully they'll be guided in the right direction as far as all these different questions that we're going to go over today. So, I always start off with asking you how you got into the industry that you're in. I know you said before you're a prior attorney. How do you get into the life insurance business?
Well, I actually came back. I was in California and came back to New York, and I was working for a company, a public company, actually. I was the only employee, actually, of the public company. It was all really being controlled.
Small public company.
Yeah. And I was the executive assistant or something to the chairman. And I had already been property casualty licensed because in a prior life I was involved with some business that I needed it. And there was a gentleman who was had the ability to meet with employees in the company. And I was watching them because part of my job was I was handling the benefits for the company administratively. And I was listening to him, and I said, this isn't right. This goes back to the days of when universal life products had like 12, 14% interest rates, whatever.
The good old days.
Yeah. And I said, he's selling it. I said, but it's like, it's too good. I said, it doesn't seem right. And I went up to the chairman and I said, listen, I know he's a friend, but I don't think he should be here. And that just kind of resonated with me. And I said, and I decided to get my license. Not that I was going to meet with them, but I wanted to understand more. Then the company eventually folded through bankruptcy and what have you, which was fine. And I went to go work for one of my brokers on the property casualty side. I hated it. Yeah. And they said, why don't you switch? Hence, I then went and worked for one of the big major companies.
Great. Okay. And here we are today, 30 years later, right?
Or more, actually. But yes, but thank you.
I don't mean to age anybody. I'm just, trying to give you the credit here.
No, I appreciate it.
They call it street cred or something like that, right? So, when we think about life insurance, most people would think it's just for families with children. And so rather than having a conversation around who needs life insurance, because ultimately most people need life insurance, let's talk about the benefits of why somebody should have life insurance. What is the reason to have the life insurance? Let's talk about some of the benefits of having life insurance, including income replacement, ensuring financial future goals, and vice versa. So somebody's coming to you, Jim, for the first time, and let's just say they're a business owner, right? Why do I need life insurance, Jim?
Well, it's really simple. First of all, you have to listen. You want to know what's going on in their life. Why are they even here? What made them think to even ask about it? I'm a very firm believer in the fact that we have 2 ears and 1 mouth. Listen. Yes. And if you let them talk, they will actually give you the answer more than even whatever I have to say. But if it's a business owner, clearly, are they by themselves or is there a partner? It depends. So first of all, if it's a sole proprietor person and there's no one else in there, then you know what? Maybe the way they're structured, he potentially has liabilities. He could have some. So if something happens at some point, he should die. His family, if he's married, or the estate could be left with debt. Yeah. And the life insurance would help with that. He could use it possibly to even use it give it to a bank, assign it to a bank and use it as collateral to help him with loans. Right. And if he has a partner, then we're talking about what people talk about as buy-sell between the two partners. So this way, the surviving partner, if there's a family, they'll be bought out of their interest in it.
Right. So the surviving partner doesn't have to be partners with their surviving spouse.
There's a lot of jokes in there and saying, would you want to be a partner with my wife? And I'm not suggesting it. I'm just saying, but that it does defend it. And it's amazing along that line how many people, we have a buy-sell agreement. I go, and?
Right.
That's all.
Right.
They don't take it. They don't take it. They're not funding it. And I said, you're missing the boat.
And that goes back to number one. I just want to say, selling life insurance it's a hard thing to talk about, right? Nobody wants to talk about a potential death of anybody, right?
That's for sure.
So you have to use a little humor and grace when we're talking about it. And
I try.
And it's a lot of storytelling, right? So one of the things that I've always tried to do when talking about life insurance is be nice to both of them, but just say, have you ever experienced or have you known somebody who said, I can't believe Johnny, at 50 years old, he's gone. Did you think Johnny's wife ever thought that he'd be gone at 50? So everybody's known somebody who's passed away, obviously, and you have to kind of make sure that people understand that it'll happen.
I am an open book, and like you said, I will tell a story, whether it's about me personally, which you would never really know, or people who are related. And I'll talk about clients. It happens all the time. And sometimes I hope by hearing it, they will say, this is what we do. And then there's some people who, even if they hear about it, they still live in a denial. And you kind of say, hey, listen, when you're ready, I'm here.
Yeah. So let's talk a little bit about the process that you're putting somebody through. There's a lot of discussion that has to be made, right? And we're what we call a field underwriter when it comes to life insurance, right?
Sure.
So we have to actually be the initial observer of how they're living, how they're speaking. That's one of the things that we're trained on and we're licensed. So do you start off with the amount of life insurance that somebody might be required and then back into the type of product or service that they might need? Or what do you talk about to them first? You figured out, yes, they're interested in life insurance, right? So now what do you do?
Well, I'm asking questions, and that's what it is. And it's as I said, let them tell you. You got to maybe spoon feed them with the questions, but you're asking, what made you think that you'd want insurance? You might have an amount that you think is in your head as to how much you think you should have. We'll get down to that. So, but what are the issues, what's going on in your life? And then you find out, well, they may have a bar mitzvah, they could have a communion, they could then have college, and then they may have grad school. And they said, well, maybe even help them with if they're married again with kids, their first house, down payment. Who knows?
Yeah, so these are future goals that you want to have established. And then if something should happen where a death will, or an untimely death will prevent that from happening, you want to make sure you have enough life insurance.
Those are realistic, and then you have to start figuring out if you're talking about college. That could be a whole nother subject, but the idea is, what school do you think? It's public or private? And what's the tuition today? You can use an inflation factor, and you're figuring it out. Right. By the time you do it, they're going to go, wow.
That's a lot of life insurance.
There's a lot of life insurance going on.
Right.
Well, hopefully it could grow. It depends.
Yeah.
And I know that's going to lead into a whole nother question is, and I know you want to get to it, which is talking about what type of insurance.
Yeah, so before we go to the type, right? So there's always a general rule of thumb that someone might say that, oh, you know what, you just need 5 times your income or 10 times your annual income for the protection. But there are other ways, right? There's several ways that you could determine based upon that. And I think you touched on it here. How many goals do you want to have funded, right? Which is the capital needs approach, right?
Like a needs analysis.
Yeah, needs analysis, right?
Right.
So you're gonna basically go over okay, God forbid, Frank, you're no longer here, and it's just Mary. Mary, what do you want to make sure that you accomplish? And go through all those goals. You add them all up. Liabilities, making sure that you cover all the liabilities that you already have, like a mortgage or a car payment. Exactly. And then you figure it out that way. Right. But then there's also human life value.
Those are all interesting, helpful ways. But again, it comes down to the person that you're talking to. They'll give you a rule of thumb. They'll give you an idea, I should say. It's also part of my job is to make sure that ultimately they can afford it. I do not want to make somebody insurance poor.
Sure.
And then it does nobody any good.
So affordability comes down to the type of product that you want, right?
Yes. I like to look at it as there's temporary and permanent, or temporary and equity, if you will. Right. It's like if you're renting an apartment, so that's term. And like a lease, it's for X number of years or what have you. Same with term. There are guaranteed, they can't change the rates. It's going to be what it is for that period of time. And at the end, you may have some options at the end, but whatever they are, they're going to be a lot more than what you were paying if you stay with term.
So most familiar, I think, is like a 20-year term policy.
Correct. That's the rule of thumb.
So you have a level premium for 20 years.
Correct.
You can cancel it at any time, and it's just like canceling the lease and moving out of an apartment.
Exactly.
So you don't. And we always laugh and say, look, not for nothing, but affordability for life insurance, you want this to be a waste of money. You don't want to die in the next 20 years, but you're buying it in the event that God forbids. Because if you die, you're in a pine box and your beneficiaries get the roses. And
it's almost like wearing belt and suspenders. You want to protect, you know what, you got to make sure it stays there. And I get it.
Right.
I could make an argument saying term is an expensive proposition in of itself. However, it is from an out-of-pocket point of view initially, it's the way a lot of people, especially younger people, should start. And there are people who they may have, and I'll use the word convert, have had term and converted to something permanent, and build up equity in it so that it'll last longer than the term. Yes, it costs more, but it's permanent and it will be there for you.
So why should somebody look at a permanent policy over a term policy then?
It depends upon their needs and doing what they want, what they expect out of it.
So the end result.
The end result. Right. Let's face it, the real basis of life insurance is to protect your life.
Right.
You're giving an income protection to your spouse, or to your kids, or whomever you could decide you want to take out a policy and maybe eventually give it to some charity. And upon your death, they'll get a nice sum of money. But realistically, it depends. I was sharing before a story about a woman who said, I have some insurance, I know I want some more, but I'm not really concerned about my kids. When they get older, they're going to move out and they'll make it on their own. And I said, that's great. But let's face it, I said, what I can show you is how you can use that benefit even later and maybe use it towards your retirement. So I said, there are many needs for it.
And so how would that look? Using permanent life insurance, there's a cash value component to it.
Correct.
And there's always going to be a cost of insurance, whether you're buying it through term or buying it through whole life. So that gets deducted out of your monthly or annual premiums, right, on a monthly basis.
Right.
But then there's some residual cash because it's going to cost more. That cash goes into side account, sub-account.
Side account. Depends upon, again, depending upon the type of policy. And that's why I said I'd love to demystify a lot of this, but
there's a lot to go. We'll be here for hours.
I would say I look at life insurance especially on the permanent side, it's almost like going to Baskin & Robbins. There's a lot of flavors. There's a lot of types. And yes, they all may have cash value components, but how they get to those are differently. Some are using short-term interest rates. Some are using, well, I want to say mortgages from doing it. There are some that are based upon indexes. So they all vary, but at the end of the day, they're doing it. So the money gets paid in, they segregate out the cost of insurance. There's always that.
Yeah.
And then there's other administrative and mortality expenses, et cetera. And the balance will get put aside and get invested in some form.
Right. And that's what you're talking about, where if 20 years into it, 30 years into it, you haven't passed away, thank God, so you didn't need it. There's some cash accumulation that you could potentially back out, take a loan out.
And there's not every company does it exactly the same.
Sure.
Because some are, you're immediately taking loans. There are some companies that say, and no matter what you do, it will reduce your death benefit as you're taking it. However, there's companies where you have and by the way, on those where you're taking the loans, that could exceed and eventually it'll dissipate. There's a company or two that actually have the ability that they'll give you a guaranteed benefit for the rest of your life, depending upon what the cash value is at that time that you want to start it. And when it does deplete, you're still alive, you'll still get it, but it could become, instead of tax-free income, which is what I should have started with, is the fact that after the cash value is depleted, it could then become taxable to an extent. But the fact is there's still income coming from it.
And that's where you come in, because you want to make sure it doesn't turn into a modified endowment contract. And I think the insurance companies are well aware, too. They don't want their clients to have that issue. And that's when cash value life insurance becomes taxable instead of not taxable, because the IRS deems it as not life insurance anymore. Right.
That is correct.
Yeah. So, and obviously everybody should speak to their tax accountant about those situations. Right?
In the very beginning, when you sit down and I'm telling them, I ask, I want to know who's the accountant, and is this something that we need to bring he or she on board with as we're going through this?
Sure.
So that it gives them, I think, a sense of comfort, and I'm not trying, it's just to make them comfortable.
I always like to give tips and tricks, and we're not looking to trick anybody. And lying on a life insurance application is considered insurance fraud. So we have to be careful, right?
Yes.
And whenever I'm helping clients through life insurance, I always give them some precautions as far as how they're answering questions. Don't give too much information. Ask what they're asking. Do you have any tips?
You got to read the question.
Right.
I will tell you, this is funny. There's a speeding ticket, all right? And it was he was way over the speed limit. He was telling me about this. And I said, and the question, when did that happen? I'm keeping this really simple.
Sure.
And I go, it's past the question. He said, the time limit is well past it.
Yeah.
Don't even think about it. Forget it.
Right.
As if it didn't exist. On the other hand, you're talking to somebody who is a smoker. That's the classic.
Oh, I don't smoke. And then all of a sudden, you have tobacco in your nicotine. Yeah.
Or today, whether it be indulging and doing vaping and doing and whatnot. When I tell them, and they say, well, I'm going to stop. Well, great. Let me know.
Give yourself a couple of weeks or a couple of months.
Well, even that, unfortunately, I do have a fiduciary responsibility to them and tell them about it, but I do have a responsibility also to the company.
To the insurance company. We are field underwriters. The other thing that I always explain to clients is you have to remember we're the initial question maker, and they look for consistency. So if you tell me one thing and then you tell the medical underwriter something else, that raises a red flag, and they're going to look into it more.
One of the things I will say that's happened now is more and more companies, with the advent of AI and doing with all metrics going in. So a lot of these applications now are electronic, not even paper. And you fill in, and so there's like a smoking question, all of a sudden you fill it in, and then at the end they come back and say, do you want to change your answer? So you really have to be cognizant of it. And I tell people, know what your medications are. What are they doing? Who are your doctors?
Sure.
You're going to say you quit smoking. Are they going to see something in your records that you really didn't stop when you said you did?
Yeah.
So, which goes to what you were saying about being consistent, which is very important.
Look, they also look at your credit history, right?
Well,
they want to make sure you can afford to pay it.
I just had an example with a young man who the grandfather wanted to have insurance for his grandson and his granddaughter, but his grandson. And he had some issues, but I figured standard. And it turned out he went to an emergency room to the hospital, and the insurance company just was using the records that they got from whatever it is. Nothing, it was very broad. And they came back, and the underwriter came back and said, I have to decline him. And I said, for what? And I went back and got his doctor in the hospital, and I got him a standard policy.
You fought for them. Yeah.
Yeah.
And that's
what happens is with the records they were getting, so they're not always complete. But this is now where you talked about the term with a stock company. They said, this is our answer. This is what's happening.
Sure.
And I said, what do you mean?
Yeah. So
AI is there, but it's evolving.
Right.
And when I'm saying AI, I really just see the world of technology as to how
they're adapting. They're looking into things, right? Yeah. And the other thing is when you're applying for life insurance, there's the owner, there's the insured, and then there's the premium payer, right? Mm-hmm. You mentioned a grandchild, right? I want to buy my grandchild life insurance. There has to be an insurable interest too. Like you can't just look at a stranger and go, that guy looks really sick. I want to buy life insurance so that when he dies, I can make money off of his death.
The grandfather, it was interesting, is they can do it.
Right, because he has an insurable interest.
And he was actually, until such time, I made him originally the beneficiary, even though he was the premium payer. Subsequently, he passed away. The father was involved, and now he's of a majority, so he has his own policy.
So beneficiary designations can always be changed afterwards.
Yes.
They're not permanent.
No, you can change them, and if you're not, and someone else can't, even the beneficiary can't call in and get information.
Sure.
They can find out if the policy's in force.
Right.
That's about it.
Yeah. So a lot of times sitting with clients, you also have to prepare them for what they're about to go through with the underwriting process. They're going to ask medical questions. And I remind clients that this is a public or a private company that's in business to make money. They want to earn money, right? They're allowed to do research on your health. And they will do the research if they deem it necessary. And they will continue to dig if they find something. They're going to ask for medical records. They're going to ask for what the doctor had to say. And a lot of times, if somebody gets declined or rated, sometimes clients get a little upset. And I say they have a right to rate you because they're insuring your life. So I think ultimately, when you're looking at an application, how do you prepare somebody for... I think you started to say it, and I might have interrupted you about getting all your doctor's records ready. Like, those are the tips that you should...
Well, you may be telling them who the doctor is that has their records, and you may want to ask if you can see them before then and doing... You may.
You can't change them.
You can't. But on the other hand, you go to the doctor, and all of a sudden you're telling them everything, and little do they know. The fact is they're taking their notes, and guess what you're talking about is there. So you should know what's in there in that regard.
And some of the life insurance, and again, life insurance is designed for a death benefit. We know that. Right. But there are some permanent life policies that have some living benefit riders and stuff that you could talk about.
Yes.
And it could be a disability benefit rider where if you become disabled, you don't have to pay your premium anymore, like a disability waiver, a premium. Do you typically recommend things like that?
First of all, let's separate them out because a waiver of premium is for permanent disability. If you're permanently disabled for 6 months, and at least in that regard, and then your premiums or the cost of insurance could be waived for either permanently or for until such time as you may get better or what have you. But that's not really a living benefit per se. The advent of living benefits really goes back, even, believe it or not, to the 30s, where you had these, what they call these ADPs. And what they did is what I'm talking about is having a terminal illness, where then they were able to access the death benefit in advance, or part of it, maybe not the full amount. And they would get that benefit tax-free. And it stayed that way for a long time, up until maybe 20 years ago. It's like the telephone. All it was the telephone, you used it, hello, and you hung up. Now You can be on your cell phone, and all
like
of
a
a sudden
pure-
it can do so much
Right.
more. And that's what's happened even with life insurance. So what's happened is the quality of life. There's more. We are living longer,
Sure.
but the quality of life may not always be good. You have a heart attack. You have people who have, when it first started, AIDS. There could be a stroke. There could be a burn. It could be anything along that line. So insurance companies started creating these living benefits or accelerated benefits. And so from company to company, and by the way, the states are the ones who dictate the policies.
Right.
So it may vary from state to state, even from the same company, believe it or not, as to what they offer.
Sure.
But they allow you to access, depending upon the condition, a certain amount of the benefit.
One of the newest ones is a life insurance hybrid with long-term care.
Correct. That is the next step, if you will. That they had chronic, but that you really can't equate it to be a long-term care.
Right.
It looks and smells and almost acts like it, but it's really deficient compared to what is
Chronic would be cancer. Chronic would be...
If you can't do 2 out of the 2 daily activities, that's what we're talking about, to the amount, that's an IRS
definition.
definition,
Right.
exactly. But you're right. So a lot of the companies, especially in the permanent companies, have created these hybrids or with a rider, which does cost.
A little extra, yeah.
It will cost you more. But it would meet and smell, for most cases, like a long-term care policy. So God forbid you have both. And if it does, so some companies, again, vary. It may deplete some of the death benefit.
Right.
But if you die while you're on claim with that, then your beneficiary will get both. But I do want to add one thing. There are companies that actually have living benefits, believe it or not, sitting on top of term insurance.
Okay.
Which to me is great, because especially if you're talking to anybody but a young person, they're going, they don't understand it, but at least you know that you're doing a good thing, because they now have these benefits that they didn't even, God forbid something happens, that they didn't even realize. They're going to know about it when you sell it to them.
Sure.
But
We all forget.
But you forget. But it's at no additional cost. It's embedded into the
That's
product.
great. And I think ultimately that's why we see a lot of online, apply for life insurance online, right?
Oh, gosh.
And a lot of times what I always find is we're cleaning up after they do that, right? Because they've made mistakes. They don't realize life insurance is something you want to speak to a Jim Feldesman about. It's somebody you want to speak to your advisor about, because it is complicated. And the other thing I'm just going to touch on, because you mentioned it before, is about insurability. When we're young, it's the least amount of money, right?
Correct.
We might not have any illnesses, but as we age and as we start getting diseases or injuries, like a heart attack, somebody has a heart attack, they might not get life insurance now for 5 or 10 years. Or if somebody comes down, God forbid they have cancer, they're not going to get life insurance for the rest of their life. So it's important to think about that before those things come around, because then you'd be uninsurable.
Which even goes back to what you said even at the very beginning, is the fact if somebody's like, why do I need it? You're talking to a 20-year-old who is invincible in doing it. And believe me, I'm not saying that you need it. So if you want it, you want to protect your insurability and then eventually make it permanent, or do you want to build up equity at this point and have the death insurance? But the reality of it is that it becomes a nest egg for you at some point.
Yeah.
Hey, that's terrific. But you're doing a couple of things for yourself, but I'm not pushing it. If anything else, at least take a certain amount of term insurance and
be able to convert it later on.
Convert it later on. So you have it, to your point.
And let's remind our listeners what doing a conversion is like. So you have, maybe it's a $500,000 term policy or $1 million term policy, and you're getting in your 30s or something, you might want to start converting some of it. And you're already insured by the insurance company,
Correct.
so you're just moving the type of policy, paying more, but you don't have to go through your underwriting process
None.
again.
It's all.
Right?
It's
you already
just,
have the life insurance.
Just a stroke of the pen, signing on a piece of paper, and you're saying, okay, I'm willing to pay more.
and have build up
and
cash.
then build up equity in it.
And you're doing that because term insurance will eventually end.
Right.
We're permanent as long as you continue to pay your premium. It'll last for as long as you're paying your premium, hopefully.
Or at some point, depending upon the policies, while it may not be guaranteed, there may be sufficient value in the policy that will continue the payment of the policy, and you may never have to put another dime into it at a later point.
And the last question, you and I were around when most insurance companies were considered mutual life insurance companies. They're now considered privately or public insurance companies, right? A company like Prudential used to be Prudential Mutual, which meant that when you bought a policy, you were a owner of that company. But now Prudential is a public company, and you no longer receive dividends because you're no longer an owner of the company.
Good question. I try, and even from my standpoint, when I'm dealing with the companies, there's a difference.
Yes.
I do write with stock companies, but I prefer to write with companies that are still mutually owned, which means they're owned by the policy owners.
Yeah.
It just seems to be, not that it's easier, I think that they just, it's handled differently. And it gives you, and because they're answering to the policyholders, they're not answering to the stock.
Correct.
And I think that is a difference.
Right. You also get paid dividends eventually, right? Hopefully, if you have a cash policy.
Correct. It depends. Dividends being with a whole life type of company would pay a dividend. Others have other ways of implementing values to go up.
Thank you for joining us.
My pleasure.
Do you have any other pieces of information that you think it's necessary for our listeners to hear about life insurance? Anything that we haven't discussed so far?
For a very short period of time, we covered a lot.
Yes.
And
there's a lot more we could do. We could probably have 3 or 4 more.
Yeah. But I think it is finding somebody who you feel comfortable talking to, you trust, especially if it's a referral, then hopefully that person you can trust even more. You talk to people. You may want to interview. You may, if you don't have anybody, and find out, are they really listening to you as to what your needs are? I think that's a key. And look, I have the gray hairs. I've been at this long enough. So there's very few stories and things that I have not heard. It's not an easy area, but it doesn't have to be definitely terrible.
And you can ask for help, right? That's why we have to have a license to be able to talk about it.
Correct.
Because it's complicated, yeah.
It is complicated.
Right.
At the end of the day, it will protect you.
And how can our listeners get in touch with you if they're interested in getting in touch with you?
You can reach me at 914-552-2330, or you can email me, and I have a little link in there even to set up a time. But my email is feldesman_james@nlgroupmail.com.
Thank you very much for joining us.
Thank you.
Hope to have you back again, and we can dive a little bit into all these fun stuff to talk about. So thank you very much, everybody. I appreciate you listening in today. If you have any questions about life insurance, if you're interested in talking to Jim, you can catch up on his information on the podcast. Please remember to like, share, subscribe. Share this podcast with those that you love, that are in your family, that you think should buy life insurance, and just tell them to have a conversation with a professional. I think it'll be very helpful if you do that versus going online and trying to get a quote for online life insurance. It's a lot of work. Don't forget to check us out on www.enrichlifepodcast.com. We are on all of your major podcast platforms, and we'll see you next time. Thanks so much.